Hi everybody, and welcome back to FANG Friday. I'm Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Anyway, we're happy to have you back, and hope you're looking forward to this week's installment. Before I start in on the FANGs, people ask me all the time, what do you think of the market, and is it going to fall down to and double bottom or soar? What's it going to do? And my answer, by the way, is quite easy. I don't try to tell the market what to think or what to do. I try to let the market tell me what it is thinking, and this is particularly true of the FANG stocks, which are generally I think what I would refer to as being fairly poor value. I mean, they're very high in their price to book ratios, and they're, in some cases, their price earnings ratios are right out of sight. So what we really have to do is to watch what I would call the FANG technicals there, which is, of course, what we are going to review today. And we are cautious and careful, but I think we can learn a lot by just watching and listening to what the market is trying to tell us. So what do I mean by all of this? Well, let's start off with Amazon. And of course, some while ago, that stock broke out over its HB3, which is 16 times book value, and has been happily, not rapidly, but it's been happily and steadily kind of moving higher ever since. And I would definitely have to put that in the buy hold category. And if you had seen me on BNN about a month or so ago, I featured this when it broke out as a buy. Now, what happened this week? A couple of quite interesting things. 3 days ago, Facebook decided to break out. You know, they're now integrating their programs, and that now you can buy seamlessly through Facebook. You don't have to shift over to Amazon anymore, and that has really pumped the stock. And as you can see, it's had a very, very nice breakout. Now, very often, of course, what we see in stocks that break out is, remember when we saw Amazon breaking out, it broke out and then it pulled back. Well, I don't know whether Amazon is going to break out and then pull back to the line. That's a very common event, but nonetheless, the stock has broken out. And so that's positive and bullish. So there are two stocks that are buy holds in the FANGs. And today, well, guess what? NVIDIA just broke out as well. In fact, it gapped higher. So we now have three of them in the positive column. Who hasn't broken out, of course, is Alphabet. But look at that, the stock is just... It's hard to say whether the stock wants to break out or not, and of course we can see that the earnings forecast trend is falling, but that stock is tight up against its super growth price. That, by the way, is a very significant valuation level, and 3.5 times book value. A move across that break point would call for a move to 1,735. So needless to say, we are watching, and you should be watching Alphabet very carefully to see if that happens. I mean, don't rush in and buy it on the assumption that it will. Watch it, and when it tells you it wants to go, it's going to go. Okay, turning to Apple, what we see here is, as I showed you last week, a kind of what I would call a pseudo-technical top. Okay, the peak of the movement before the crash in the market. Well, the stock has got right back there again, and it hasn't broken out yet. Whether it's going to get beyond its HB3, which, by the way, would be 16 times book value, I really don't know, because that would mark actually an absolute valuation peak for Apple for all time. And by the way, before I leave Apple, remember what I said before. The market has a memory, and very often old peaks, old valuation peaks, are where the stocks break out. So remember that the market does have a memory, as I have said before. And when a stock reaches back to an old valuation high, that very often marks the end of its move. So I'll be watching Apple very carefully when it gets up to that $335 mark. Okay, turning to Microsoft, remember the same thing I showed you last week has happened with Apple. It's also coming right up against the peak that it did prior to the market sell-off. And so the stock price has been struggling against what I would call, I guess, conventional technical analysis. My own suspicion, of course, is that this stock very definitely is going to move on to $205. And given the fact that if you like the supporting cast, which includes Amazon, Facebook, and NVIDIA, now are all urging the market, the Standard & Poor's, and now indeed Microsoft higher, I suspect it's probably going to get there. Well, that leaves us with Netflix. And remember what I said about Netflix and Disney. I was watching Disney to see whether it could break out, to see which one of those two stocks would break out further, because I thought that Disney might be kind of the canary in the coal mine that tells us that if it breaks out, then perhaps Netflix will follow. Well, Disney did, and in fact, it not only broke out, but it gapped higher. And that, by the way, despite the fact that the earnings forecasts are going right into the ditch. However, I think the promise that their theme parks are going to be open again is perhaps encouraging investors to get in now. And, you know, from a long-term perspective, the stock is reasonably valued in price-to-book terms, not necessarily from its forward PE, which is, by the way, 42, which is quite high for that company, but nonetheless, on a price-to-book basis, it's quite reasonably priced. So, it's broken out, and what about the last of the FANGs, Netflix? Well, it just stubbornly refuses to break out. And let's take a look at the very, very close-in action of that stock. It's banging against that HB4, which is almost 20 times book value, and it just will not break out so far. However, perhaps with everybody else breaking out, it will as well. Anyway, so in sum, what have we got? Well, we've got Amazon on the plus side, and now we've got Facebook confirming, NVIDIA is now confirming, of course, Apple and Microsoft are already there. Google looks as if it's on. Maybe it's on the verge of something, maybe it isn't, but it's certainly right there, and any little thing that'll push it over the edge could do it. So that would be 6, and so the only stock actually that has not yet confirmed the FANGs, and therefore, by the way, not only the FANGs, but has confirmed the Standard & Poor's 500, the only stock that hasn't confirmed that is Netflix. If all of these stocks break out and go together, then I will have to say, whatever else I think about the intrinsic value of the stock market, 21% of the market says nuts. We are going higher. Anyway, that's it for FANG Friday for this week. I hope that you've enjoyed it. Do remember to, if you don't mind, liking this, and of course, if you want to be alerted every week, use that subscribe key as well, and you won't miss it. Anyway, this has been Ross Healy. I'm the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates, reminding you that nothing, including investing, is difficult if you have the right tools. And as we saw this week with those two breakouts, boy, those tools are telling us that things are still bullish. So, have a good week. I'll see you next Friday.